Okay, what is up, traders? What's up, tycoons? We are going to talk about PayPal in today's video. Now, PayPal is now beyond dirt cheap, okay? And it's got a rating upgrade from Seeking Alpha. We're going to dive into PayPal a little bit more in this video. So make sure to smash that like button and subscribe to the channel if you guys are new. Of course, as always, none of this video is intended to be relied upon as financial advice, okay? Trading in any type of stocks, bonds, commodities, or crypto involves a significant risk of loss and is not suitable for all investors. This is rather just informational and educational, okay? But can you believe that PayPal Holdings stock has dropped by a staggering 80% from its all-time high? There's nothing wrong with PayPal fundamentally as the company goes through a transitory slowdown process throughout the broad market. But moreover, PayPal's recent earnings results beat estimates and indicate the company is performing relatively well, provided the current economic conditions. Nevertheless, PayPal stock dropped even lower after its earnings results on a downgrade from the experts at Credit Suisse. Now, why is Credit Suisse even eligible to give anybody upgrades or downgrades, guys? We all just saw what happened with Credit Suisse. So I don't even think we should pay attention to them or they should be allowed to say anything anymore. Now, it's possible that PayPal has plenty of growth ahead and at 11 times the consensus forward earnings estimate, its stock is beyond dirt cheap right now. So we're going to dive into it a little bit more. As I said, smash that like button, subscribe to the channel if you guys are new. Shout out to today's sponsor, Simply Wall Street. We're also going to use them to dive a little bit deeper into PayPal and take a look at some of the fundamentals even more. More on them later. Now, yes, PayPal was overbought and overvalued around its highs. However, the drop in PayPal stock has brought its share price down to an absurd level. PayPal's fundamentals remain robust even as the company battles through the overall slowdown process. Furthermore, PayPal's recent earning beat estimates and the company provided solid guidance given the challenging economic atmosphere. And we can take a look here and see, PayPal down 80% from those all-time highs. Now, nevertheless, instead of rallying, PayPal stock dropped like a rock to a new multi-year low after its earnings results, primarily due to a downgrade from the experts at Credit Suisse Bank. Despite the company's temporary challenges, PayPal remains a high growth candidate and its stock price is now at a meager 11 times the consensus forward EPS estimate. PayPal has a strong probability of continuing to increase revenues at double digits, providing significant EPS growth and enabling its stock price to rise substantially in the coming year. PayPal stock is beyond cheap now. It's ridiculous, and I'm using this remarkable buying opportunity to accumulate shares for the long haul. Okay, so I do have a small position in PayPal right now, honestly. There are some people in the Discord who are in PayPal, okay, but nothing life-changing, okay. I'm not trying to pump it necessarily. We see that much of the meltdown occurred during a long bear market from July 2021 to July 2022. PayPal stock has been trading sideways and slightly lower over the last year. Most recently, PayPal dropped to a new multi-year low around $62. The RSI, CCI, full stochastic, and other technical indicators illustrate that PayPal stock is extensively oversold, likely has minimal downside, and has a high probability of recovering and moving much higher in the intermediate and long term. The latest wave of selling appears like irrational panic selling, reminiscent of capitulation in PayPal stock. This phenomenon implies that investors and traders are dumping the stock despite a possible bottom being near. Okay. And we can really see, just how badly, things have really gone, in PayPal. Okay. I mean, if we take a look, guys, this is just absolutely brutal. Okay. Giving back all of the gains here recently, okay, that it took a very long time to accumulate, right? From 2017 to February of 2021, and in a very short time, okay, we've given back all of those gains, and significantly down. Now, like most companies today, PayPal is going through a temporary slowdown and decreased profitability phase due to external economic challenges. Nevertheless, the company's recent earnings came in better than expected. PayPal delivered non-GAAP EPS of 1.17 versus the 1.10 consensus estimate. Also, the company beat revenue estimates, growing sales by 8.3% year over year to $7.04 billion. The company's better than expected results materialized due to robust growth in the e-commerce industry and effective cost-cutting measures. Furthermore, PayPal raised its full year 2023 EPS growth guidance from 18% to 20%, bringing the anticipated full year EPS number to 4.95 versus prior guidance of 4.85. The takeaway of this is that the market became too bearish on PayPal and sales and earnings revisions decreased too much. Now PayPal is beating estimates, and this dynamic could continue as we advance. As the slowdown moderates and the macroeconomic conditions improve, PayPal should return to low double-digit revenue growth, and the company's EPS should continue increasing substantially in the coming years. At 13 times this year's EPS estimates and 11 times 2024 EPS projections, PayPal stock is remarkably cheap, and its multiple should increase with the company's stock price in future years and quarters. So why is the stock tanking instead of surging, you say? Well, if you ask Credit Suisse Group, analyst Timothy Chiodo, who downgraded the stock to a hold, lowering his price target to $85, which is still a 33% upside from here, Mr. Chiodo cites margin pressure and other variables affecting profitability in the near term. However, Chiodo could become more constructive on the shares if he sees the potential for a resumption of more meaningful total company gross profit growth in 2024 and beyond. First, who downgrades a stock when it's around a 52-week low? Second, the stock price is close to $60, and the analyst downgraded price target is $85, which is roughly 33% above PayPal's current price. Also, where was Mr. Chiodo when the stock dropped 80%? Downgrading PayPal stock from a buy to hold down here is pointless almost and misleading. Fortunately, this nonsensical dynamic provides a substantial buying opportunity here. Okay. So what other Wall Street guys think, all right, of the 47 Wall Street analysts covering PayPal, 23 have it rated as a strong buy, 11 as a buy, and 13 as a hold here. There are no sell or strong sell ratings on this stock. And if you take a look at the average price target of $100.75, okay, that's roughly about a 50% upside right here. Okay, while we have a relatively broad price range for PayPal, the average one-year price target is approximately $100 on the stock. As the stock is around $64 right now, the average, and I think today at the time of this recording, actually, it went down a little bit more, and it's right around the $62 range, if not $61 range. But the average estimate provides around 58% potential upside over the next 12 months. Now, when it comes to the valuation, okay, and you look at some of the revenue estimates, they're likely lowballed. Consensus revenue estimates have come down during the slowdown phase, but we're seeing PayPal surpass the recent projections. Therefore, we could see PayPal continuing to outperform the overly depressed sales estimates, returning 10 to 12% revenue growth in the coming years. The EPS estimates are likely moving much higher. We have the average EPS estimate at $4.94 this year, but let's presume that PayPal can earn $5. Also, with a 20% year-over-year EPS growth rate, PayPal can provide about $6 next year. At around $64, a potential double-digit revenue growth rate and earnings increases ahead, PayPal is beyond dirt cheap here. We're looking at a stock with a long growth runway and significant profit potential, trading at 10 to 12 forward EPS estimates. Furthermore, utilizing consensus estimate figures, we now arrive at a meager PEG ratio of just 0.65 for PayPal, which is the price to earnings to growth ratio. Okay. As the economic slowdown moderates and more liquidity returns to the market, PayPal's valuation will likely increase to a forward PE ratio of 20 or higher. This dynamic should enable PayPal stock to rise sharply due to a combination of EPS growth and multiple expansion in the coming year, making PayPal, possibly one of the best top buy and hold stocks for the next 5 years, right? If we dive in a little bit more, yes, there are risks. Okay, there's always going to be risk associated with making any type of investment. Okay, PayPal may face more significant margin compression. This dynamic will make achieving the projected EPS and revenue growth figures more difficult. Moreover, macroeconomic factors, completion, and other elements may weigh on the stock price for some time. Additionally, PayPal's multiple may not expand as envisioned, and its stock price could stay depressed or appreciate less than anticipated as we advance. So, we're highlighting some of the things about PayPal here, and just want to be clear, okay? There is, potential rewards, but there's always going to be lots of risk involved. So, make sure to do your own due diligence. Shout out to today's sponsor, Simply Wall Street. There's going to be a link in the description below or a pinned comment below. The first 100 people to join using that link will get up to 40% off. And you also get a 2-week free trial, a 14-day free trial, which is really amazing. And, they do a great job of providing you guys some fundamental analysis. So this is from the Simply Wall Street platform. And you can take a look at the price to earnings ratio from its peers versus its peers. We have MasterCard trading at 37.5, the PE ratio. Okay, Visa at 30.6. Pfizer over here at 30.4, and PayPal is at 25.4 right here. So it's below the peer average right now, which kind of suggests that PayPal is a good value based on its price to earnings ratio compared to the peer average. Now, when you look at the price to earnings ratio versus the industry, that's somewhere where PayPal may still be overvalued, right? If you take a look, the industry average is 11.2, okay, and PayPal is at 25.4. All right, so compared to its competitors and some of its peers, right, maybe it is a little bit undervalued, but when you look at the industry average as a whole, there is a chance that PayPal could still be overvalued, right? When you look at the price to earnings ratio versus its fair ratio, the fair PE ratio puts it at 18.6. This is the expected PE ratio taking into account the company's forecast earnings growth, profit margins, and other risk factors. And right now it's at 25.4, which is what we mentioned. Now, so on this basis, PayPal is expensive based on its price to earnings ratio compared to the estimated price to earnings ratio. Okay. When you look at the share price versus its fair value, there is about 31.2% possibly undervalued here, right? When we started earlier in the video, we were talking about that potential 30% upside. Simply Wall Street is also saying something a little bit similar here, talking about the fair price of PayPal when looking at its future cash flows. All right, for this estimate, they use a discounted cash flow model. All right. And, it's about 31.2% undervalued with a fair value at $89.68. So, there are some, good signs in PayPal, and there are some, bad signs in PayPal, right? So, there is that chance of a reward, but there's always going to be that chance of risk. Okay. Now, that's going to be it for today's video. All right. If you enjoyed, some of the things that we used in this video, right, to look at PayPal's fundamentals, I really recommend using that link in the description or the pinned comment below. So that way you guys can get a 14-day trial, right? And what you want to do is not only just look up PayPal, look up your favorite stock, guys. Look up Tesla, look up Nvidia, right? Maybe look up something else. Maybe you want to look up JP Morgan. Okay. Maybe you want to look up, some of the different funds and some of the different stocks that are out there. Simply Wall Street is a really great platform that will help you guys out. If you're not good at fundamental analysis, or you don't know the first thing of fundamental analysis, Simply Wall Street is going to be there to provide a helping hand. And as I mentioned, the first 100 people are signing up. Okay. So you want to try to sign up quickly, so that way you can get that discount of up to 40%. All right. Thank you guys for watching. Smash that like button and subscribe to the channel for more.